Hey, what's up guys? John here. 11% of all FHA loans are presently delinquent. There's about 40 million FHA loans outstanding. So over 4 million loans right now are not being paid. On top of this, VA loans, there's a forbearance. They are not reporting on the borrowers not paying on these loans. Something very big is unfolding inside of the residential housing market, but something even bigger inside of apartment construction and office and commercial real estate.
Commercial real estate is in terrible trouble.
Commercial real estate foreclosures soar to levels not seen in nearly a decade.
We are walking into a storm inside of real estate, unlike anything we've even seen during the 2008 financial crisis. I believe there's one very lucrative opportunity inside of real estate we're going to be walking into over the next 24 months. And in this video, I'm going to show you exactly what that opportunity is, where the big opportunities likely will be, and what you can do to capitalize on it with very little money. Please hit the like button, YouTube will share the content, educate more people about what's really going on in America's economy. If you'd like to fix your credit to position yourself for funding, maybe you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any issue at all like that in your credit report, go to greatcreditfast.com, click the link in the description just below this video, schedule a free call for Monday. Take a look at this. So, and this is shocking. This is the blue line right here, 10.81% of FHA, right here, FHA loans. Now, the more you look into this, the more you'll see how big of a storm this really is. Presently, there's about 40 million FHA loans. And they are saying if you can't pay your bills and you have an FHA loan, you can apply for the payment supplement, which will reduce the payments 25% every single month. Yet, still, nearly 11% are not paying. So let's dig into this a little bit. During 2020 and 2021, during the mania inside the housing market, the average down payment was 6%. If you were to buy a property back then for, call it $500,000, and you were to sell it for $500,000, you'd be underwater when you take into consideration the listing agent, the selling agent, transfer taxes, escrow, any type of closing cost. It's going to cost 8 or maybe 9% just to sell a property in most markets. So you would buy a property and be upside down. That's if the market has not changed. The market has changed, even though Zillow and Redfin and Trulia, these estimates, they indicate that the market's very strong. Home sales are presently at a 30-year low, almost 30 years, National Association of Realtors, January. Home sales last year dropped, lowest level in 28 years. Fortune, lowest level since 1995 in 2023. So home sales, homes aren't selling like they were before. And I would argue the reason for it is high interest rates. Borrowers simply can't qualify at these prices. So what does this really mean? Are homes really worth what they say they are? Well, what I believe is homes are worth a lot less, simply based on affordability. And so when you sit to really look at this picture, if people are underwater and you have, roughly 40% of Americans, look at this, more than 40% of U.S. mortgages were taken out during the peak housing market. So you have 40% of mortgages taken out at the height of the market with an average down payment of about 6%. What does that mean? It means 40% of mortgages, in most cases, are probably underwater. You have 11% of FHA loans underwater. VA loans not being reported. Look at this. VA urges mortgage firms to extend foreclosure pause until next year. Just came out, 29th of May. I mean, even Bloomberg was talking about this right here. U.S. will buy veteran missed mortgage payments from lenders to halt foreclosures. Why are they doing this? Well, they're doing this, I believe, to hold off on a big storm. I think that the big storm coming is probably going to be the last quarter of this year, or the first quarter of next year. We're going to start to roll into this thing in 2025. I think things are going to get really crazy, and I think we're going to see a lot of people walking away from their properties. You think about this. People are buying these homes at a 3% mortgage rate, low taxes. They're buying them, low insurance rates. Insurance and taxes have gone through the roof in most markets. I mean, some markets, taxes are up 20, 30, 40%. That's absolutely crazy. Look at Florida, for example, a state in which a lot of people move to. People are moving here, over 1,000 people a day were moving to Florida during the peak. Well, the home insurance rates surged 40% since 2019. And in Florida, they say that Florida property owners pay on average $10,966 a month. Is what they're saying, or a year, right? So roughly $1,000 a month, $900 a month is what they are saying. Now, I mean, I've seen estimates $8,500. Look, it's crazy. It is absolutely crazy because in 2019, the average annual premium in Florida was sub $2,000. So whether it be that it went up 400%, 500%, or 600%, it's crazy. It's unaffordable for most people. And so if a lot of people can't afford it with insurance, with taxes, what are they going to do? They're going to, and they look at the cost of the world, record high inflation, they're going to start defaulting, right? It's survival mode. I mean, look at this, for example. When I see things like this, they map out, right here where people are delinquent on their credit card bills. And I believe, credit card delinquencies, they fall in line. Louisiana, Mississippi, Alabama, Georgia, these markets, generally, if you look at 2007, 2008, 2009, when things went from all-time highs and they slowly started going down, and then 2010, 2011, you started seeing tons of defaults and delinquencies. What I think we're walking into is like a 2008, 2009-ish period right now, but they're hiding the truth of it. And in 2025, we're going to start seeing more of that 2010, 2011 thing ramp up, except this time it'll be a lot worse because back then you didn't have the commercial real estate crisis. You didn't have all the stimulus, all the money that was being pushed all around the economy. You didn't have all that. So when you look at these markets, right, these markets generally are based on low income consumers. They have very low income. So property taxes going up for these people in these states going up 20, 30, 40 bucks a month, and insurance going up 40, 50 bucks a month. This is devastating to a lot of these people. And so when you look at a Wall Street investor, right, what are they going to be doing? I believe they're going to be looking at where the opportunity is. And they could be picking up deals almost for free in a lot of these states here. And I think that what a lot of investors will do is they will start looking at some of these states before they're investing in Florida and Texas. Texas, their office market is completely overbuilt. Dallas and Houston and Austin, they have so much vacant square footage. Same thing in a lot of these markets, New York City, California, and Los Angeles and San Francisco. So what I think they're going to do, a lot of investors are going to do, is small mom and pop investors are going to be looking to invest in other areas that have the cash and they can do it. I think we're going to see Wall Street investors looking to pick up these properties essentially for free. And what they're likely going to do, not all of them, but I think a lot of them will start to turn these into rentals. And I think we're going to see a consolidation of single-family homes to likes in which we've never before seen over the next couple of years. And so in these states here, I think we're going to see a lot of investors also looking at like the Section 8 program, buying a lot of these Section 8 properties. I mean, right now, if you look at, the White House even came out saying these properties, they'd build or preserve 1.2 million. They want millions of affordable units. And I think the Section 8 program is going to become extremely popular, and people are going to be flocking to a place of safety, which Section 8 has been that. During 2020, during all that madness, those Section 8 landlords still got paid. So I think we're going to see a lot of people saying, you know what, if Big Bro wants to control millions and millions of properties, and they're going to incentivize people to participate inside of this consolidation of properties, it's likely going to be through a Section 8 voucher program. So I think we're going to see a lot of money flowing into these areas, picking up these properties for basically nothing, and we're going to see Section 8 investors step in all these states here. All these states, picking them up for $20,000, $30,000, $40,000 a door. We're going to see a lot of these properties right here inside of Florida where these people are underwater on these homes. They're going to be walking away, and we're going to see a lot of these banks, a lot of these private equity investors start to buy these homes by the hundreds of thousands of dollars or hundreds of thousands, and they're going to start selling them. Not hundreds of thousands of properties, hundreds or thousands of properties. We're going to start seeing these big investors stepping in and acquiring these properties. I mean, there's just going to be consolidation of property, of wealth, unlike anything we've ever experienced before. Like the next couple of years are going to get so crazy. I think a lot of people don't understand just how fast we are moving. This is like a speed train. It's like a bullet train in Japan. That's what we're walking into right now in the economy. The problem is that most people think that, we're just going to have a soft landing and everything is going to be okay, and they're not realizing where we're actually headed. We're heading into a situation where renting is going to be so much cheaper for almost everybody else, and only the rich are going to be able to own properties. When you think about it, unless you are making several $100,000 a year, and that number is growing over the coming couple of years, it's going to be hard to own even a basic home. 5 years ago they said make $100,000 a year. That's basically the sign of making it. And now they're saying in many cities, if you make $150,000 a year, it's considered low income. Well, when you look at the policies that America's stepping into, they're all inflationary. We step into an energy transition. All of this is going to increase the cost of everything, from energy to property insurance. Everything is going to continue to go up. And so if the wages are not increasing, then what's going to happen? People are just going to continue renting. And it's just going to push everybody, I believe, towards two classes of people. It's going to be the landlords that own everything, and they're going to be renting it out to these tenants, and they're going to be likely acquiring these properties at a much lower cost basis, because if they're buying them from a distressed lender, or they're buying them from a distressed property owner, they're going to be buying them at a lower price point. They're going to be able to rent them at a lower level. We're at a 50-year high in apartment construction. I mean, you look at this. It's just going to be a surge of rental inventory. And people are going to start looking, hey, do I want to continue paying these property premiums on these insurance bills? Do I want to pay the increased taxes? Or do I want to go out there and rent something for 40, 50, 60% less and not have to deal with the maintenance, the upgrades, of and all these updates that are going to be required soon? They're not going to do it, right? So we're going to walk into something big here. What do you think about this entire situation? Let's have a conversation about this below. What do you think about this? 11% FHA borrowers behind on bills right now on their mortgages. Like, this isn't, they're just like 30 days behind. Like, they're delinquent. This is hitting their credit scores, right? It's crazy. Let's have a conversation about this below in the comments. And if you'd like to fix your credit to position yourself for funding, I believe, as I mentioned, Section 8, I think is going to be very, very, very big over the next 2, 3, 4 years. I think we're going to see a lot of people moving into the Section 8 voucher program, a lot of investors. And I think we're going to see a lot of people requesting to get approval to become a Section 8 tenant. And I think it's just going to be, without doubt, going to happen. Like, there's no way this doesn't happen. We're walking into a situation where I think there's not going to be an alternative. Let's have a conversation below. If you'd like to fix your credit, we'd love to help you. At my company, greatcreditfast.com. That's greatcreditfast.com. If you're thinking about getting funding, maybe to buy a Section 8 property, maybe to buy a primary home, buy a work truck, get a business loan, we'd love to help you at greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any issue at all like that in your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call for Monday. Catch you next video.